Financial Freedom today did a really interesting post. He said he's very bullish on Ripple, the company, but in terms of XRP, he's currently kind of neutral. I wanted to talk about this. Now, let me make this clear. There's a lot of institutions, big investors that see things the very same way. They're more comfortable owning Ripple stock than they are the XRP token. So I thought this would make for an interesting discussion, and that's all it is. Just my opinion. I'm not trying to tell people to buy one or the other, both or neither. But I think it does bring up an interesting debate, so we'll get into that. Also, I have a video from Mohamed El-Erian where he's talking about the Federal Reserve, what they're going to do with interest rates and what they probably should do. Spoiler alert, they're probably going to do the wrong thing. So we'll go over that. And lastly, we have some commentary, a video, Gary Gensler here recently. So we'll take a listen to see what he has to tell us. Now, let's take a look at this. Financial Freedom, again, he says very bullish on Ripple, the company. Personally, he sees huge upside. It is current valuation of $7 billion, 17 to 15x from here once it IPOs, and possibly by 2030, somewhere between $500 billion and $1 trillion valuation. So he sees Ripple, the company, growing to the upper echelons of tech companies, essentially, companies globally. And personally, he says he is kind of neutral to XRP. And again, there's a lot of very serious investors that think exactly like this. Part of the problem here that I have with Ripple is, investing in Ripple, you have very limited data. So it's hard for me to say with certainty. And it's the other reason why I don't like the investment that much. If I can't dig into your financials, I don't really know what's there. It's guesswork at best. But from what we do know, well, almost all of Ripple's revenues today comes from selling XRP, a finite resource. And so that's something that's not going to grow your money necessarily unless XRP goes up exponentially in value. It's actually over time going to dwindle. Now, when you look at that $7 billion valuation versus all the XRP they hold, it sounds really good. But remember, all of their officer salaries, their operating costs, Brett Garlinghouse, David Schwartz, all the offices, all the engineers, well, that's going to eat away at, as they sell that XRP, it's not going to go to you, the investor, it's going to go into operating costs. So they're going to bleed that dry as well. So we have to hope that they transition into some services that are very profitable, which is possible. Highly likely that some of these will hit. That's why we like Ripple so much. But at this point in time, on-demand liquidity, in my opinion and what we've seen, it loses money. The actual sending of payments using XRP, we saw with MoneyGram at least, they lost money there. It wasn't cheaper than traditional means. They actually had losses because you have double the currency transactions, you have differences in pricing in markets. They lost a couple million a quarter. Further, they had to incentivize MoneyGram to jump through hoops and actually test the system out, and that was another few $1 million a quarter they were losing. Now, some of these other partners, the numbers might be lower, but I suspect, the breakdowns to be pretty similar. Smaller numbers, same idea. On-demand liquidity probably loses money, that they have to make up the difference there, and they probably are having to pay their Bitsos and other partners some amount of incentive to adopt the system. Now, the hopes and dreams here are that you scale up over time, and eventually this system gets some traction, and now there's enough liquidity there to make on-demand liquidity a cheaper solution, and you no longer will have to pay people to use your system. They will start paying you. But that's a guess into the future. You are looking into the future, and you are extrapolating that. That's not the reality of today. Today, on-demand liquidity is not adding money to their bottom line, and it's probably not adding any revenue at all. It's quite the opposite. They probably have revenue going out to on-demand liquidity partners, most likely. When we look at things like their exchange, they tried, their liquidity hub, they tried to launch. That failed. A lot of other things they've tried have failed. Now we have the stablecoin on deck. And that has a huge potential where they can make a ton of money. Ripple's stablecoin should be highly competitive. It's very fast, very cheap. And conversely, I think it's going to make on-demand liquidity really good. We could talk about that a little bit. So that is a potential for a lot of revenue to come in annually. But they have to be successful. And right now it's a concept. And it's not even a token that has launched. And so at this point in time, Ripple is really tied to XRP. I don't think it's possible to be bullish on Ripple really and not be extremely bullish on XRP, because again, that's where all of their current revenue flows are coming from, and you have to hope at some point in the future they turn the corner on some of these services and they also become profitable. Now that's why some people, they like Ripple better, because you get their XRP holdings along with these potential businesses, so you get both. But at this time, the reality of the situation is they're selling XRP to raise money, to bring money into their company, and they're also burning it trying to get one of these services to really get traction and start creating revenue for them. They don't have that yet. That's not a reality. That's not where we are. So personally myself, I like XRP better. I get all of the ways that Ripple will leverage XRP. Hopefully some of those are successful. If they are, they should take, XRP along for the ride. We get all the stuff that's going to happen on chain, where I really think XRP is going to be valuable. Switching in the virtual world between different types of value and RWAs and tokenized assets and things like this. But you get all the things that other developers, I believe, will start building with XRP and on the XRP ledger. I like XRP better than I like Ripple, especially at this point in time. Again, just thought I would throw my opinion in the ring. Doesn't mean you can't have both. Doesn't mean you can't only buy one or the other. Just my opinion at this point in time, where we see Ripple, where there's a lot of promise, but I think XRP is the better buy currently, specifically because we don't have enough financial data to totally assess what Ripple's doing at this point in time, and I don't like that type of investment. Let me know down below what you think, though. If you could only have one, would you take XRP, the global currency that has, billions of dollars in daily volume at times? Or do you want Ripple, the company stock that's quite illiquid and we're not really sure what their company's doing right now? It's not like a blockchain where it's all transparent and you can see what's going on. A lot of that stuff's behind the veil, and you have to do your best guesswork to try to assess the situation. Interesting to hear from you what you like better, Ripple or XRP. Again, I think they're both going to do very well. I just like XRP more at this point in time. Let me know, though, what you think. All right, let's take a look at this. Mohamed El-Erian. He sees things similar to me. Of course, he's much smarter than I am, knows a lot more. But when we look at the Federal Reserve, they were way too late to tightening. They had to see it. They kept saying, well, it's transitory. We think things are going to fix themselves. And they had to see the problem before they really started tightening. And I think coming out of this tightening cycle, it's going to be the reverse. They're not going to have any vision. They're not going to be able to look ahead. And I think they're going to cause an awful lot of problems, because by the time they see the distress, it's going to be too late. It might be too late already. And I understand their fears. They feel if they act too quickly, they'll have to reverse course. And, obviously that will look bad again. But I think their problem is not having foresight and not acting based on where they think we're going and waiting to get confirmation. It's just like if you're going to invest in XRP or Bitcoin and you want to wait till it hits all-time high and you're like, well, okay, yeah, this thing's for sure. Well, you lost most of the benefit. You have to have some foresight here. So let's hear this interview. Again, I totally agree with what he's saying here.
Time to be cutting rates, and hikes are still on the table. Well, that was the hawkish message from Fed Governor and voting member Michelle Bowman today, further raising the stakes ahead of the next critical inflation report, which comes this Friday. Joining us now is Mohamed El-Erian, Chief Economic Advisor at Allianz. Welcome back. It's good to see you.
Thank you. Thanks for having me, Scott.
All right, PCE on Friday. Let's just kick this around. If that comes in favorable, okay, should the Fed consider cutting in July?
In my opinion, absolutely it should consider cutting, but I don't think it will.
Well, why do you say it that way, that absolutely they should consider cutting in July?
So just think of the conversation you had earlier. You had disagreement about what's happening to inflation dynamics. You had disagreement about the growth dynamic. You even had disagreement about the impact of lower interest rates. We're living in this very uncertain world. If you look at the tails of the distribution, which you worry about in an uncertain world, they're heavily tilted in terms of the economy slowing much faster than people expect. In such a world, if you want to deliver a soft landing, you've got to start cutting sooner rather than later and not go too far in cutting. So
that's the other side. They're going to wait too long on this sucker. They're going to run into a buzzsaw. All hell's going to break loose. And then what are they going to have to do? They're going to have to bring those rates way down lower than they should. They're going to have to overcompensate. I can almost guarantee you they're going to overshoot this thing. Something big is going to bust. All hell's going to break loose. And now they're going to have to, start doing the same gimmicks, bringing the rates down way, way too low. You're going to have a little bit of foresight here and make the moves now. Now is the time. Jump in there. It's not like that 25 bips is going to make a huge difference, but start bringing it down. Signal to the market some hope here. Some relief is on the corner because I think things are worse than is really showing at this point in time. It's just going to run up on you so quickly, and if you wait to see that confirmation, I think it's going to be wreck city.
The most likely mistake right now, the most likely policy mistake, is a Fed that got shaken by two pretty bad calls in the last few years will end up being overly cautious and will end up not helping to preempt what could be a significant slowdown.
You used the word I was going to use. So you think that they should do a preemptive move to cut rates to protect, in quotes, the economy?
Correct. So I have two views. One is I think this economy is slowing much faster, and in particular, the household sector no longer has excessive savings, no longer has much debt capacity. This is not about a K-shaped economy. This is about an economy that no longer has buffers. So if the Fed gets the labor market wrong, we are going to have a much faster slowdown than they can even imagine. So that's the first thing.
So I think that's the big deal. What we have to be prepared for. Doesn't mean it's going to happen for sure, but if we run into a buzzsaw and you see something big bust, some bank go under, something like that. I mean, it could be significant turmoil. We saw that during the pandemic, where you had just this vicious and nasty wipeout, but it was short-lived. And I think at least, especially for the crypto sector, that'll be the case because we're in this big growth phase right now. Crypto is going to continue, but if we run into any issues here and you see this massive sell-off, it can get quite extreme. Just be ready for that. So don't be over-levered. Don't need that money today because really things could get really nasty very, very quickly, especially as we head through these summer doldrums. Doesn't mean it's going to happen for sure, but you have to be ready for the fact that it could, because nothing would be worse than you get wiped out. And then a few months later, here comes the recovery, and now the bull run is really off and running, and you've been wiped out. You gotta be built for bear here. I'm not a Nostradamus. I'm not saying it's going to happen for sure, but just know that it can. This is uncertain times, and typically, coming out of a tightening cycle, it's not a soft landing. So, do we think this is one of the most well-prepared Fed? Have they shown to date that they really are on point with their actions? No. And so they likely will make a mistake. And if they do, it can get painful, at least in the short term. Now, they might stick it just by dumb luck, too. There's always that side of it. It may just kind of play out nicely for them, and it's just dumb luck and, coloss. Great. But anyway, you just have to be prepared for this possibility. Because at this point in time, the odds aren't on our side that they're going to stick a soft landing. And, it's just not looking good. I think they're going to overshoot this, and there'll be a little bit of short-term pain. It could be significant disruption.
The second issue, which is much more controversial, is that I don't think 2% is the right target. I think, in fact, if they pursue 2%, they'll run an over-tight monetary policy, and they'll end up sacrificing the second part of their mandate. This is an economy whose underlying equilibrium inflation rate is higher than 2%. It's closer to 3%, Scott.
Yeah, we ain't going back to 2%. If they're really sticking at that, it's just not possible with the amount of debt we have out there. They don't even honestly want a 2% inflation rate. They need a higher inflation rate to keep everything chugging along with the debt load of the country as a whole, businesses, households, all the rest. It's just not possible. So if they really stick to that, they ain't getting there, and it's going to be a nightmare.
So it feels like over the last couple of days, at minimum, I'm talking about, the Fed speakers that have been out between the interviews that Steve Leisman, of course, has done. There was, Austin Goolsbee yesterday. Do you feel like the conversation is starting to tilt towards the idea that we have to be especially careful of the risks of waiting too long to start cutting?
Maybe at the margin, Scott, but not enough. And there's a reason for this. We've had so many monetary policy pivots that it's embarrassing. It's absolutely embarrassing how often this Fed has pivoted. And the big mistake, its recent mistake, of course, its big mistake was 2021 when it called inflation transitory. But let's not forget that it fell in love in the fourth quarter with soft inflation numbers. It embraced them fully and then had to reverse again. You know, you talked about with Lizanne earlier about the market going in with 6 to 7 rate cuts in terms of its expectation. That's because it believed the Fed. And the Fed was saying, I love what's happening to inflation. And then, of course, they got the shock of January, February, and March. So this Fed feels burnt and therefore is not taking enough of a strategic view of the economy.
Not
See,
the
and
time
that's
to
the
be
problem.
cutting
They
rates, and
feel
hikes are
burned,
still on the table.
but what burned them is not being proactive, and I think they're going to repeat the same error over and over again. Gary Gensler here. Let's hear what he has to tell us in this interview.
As you know, crypto, though, is becoming almost an election issue. There's reports that former President Trump is going to speak at this big Bitcoin conference. He said that he will end, quote, Joe Biden's war on crypto. And there's one more. It's become such a big deal that Mark Cuban has actually said that you, Mr. Gensler, could, quote, literally cost Joe Biden the election. What's your response to this?
I'm going to be easy with you, Anne-Marie. I don't speak about elections.
You don't have a response to Mr. Cuban?
I don't. I just really, look, my role as a securities regulator, as chair of this great 5,000-person agency that oversees $120 trillion capital markets.
He's right. His role is not to speak about elections, nor should he. But it's very true that his policies are coming back to be a political liability. Brad Garlinghouse, Stuart Alderati had called that out, and it's playing out to be true. Now, the reality is he's not a regulator looking out for the everyday investor. He's a puppet looking out for the interests of Elizabeth Warren. And, even if there was a second term, I wouldn't be surprised if this guy was sent packing. And that's really up in the air again, because this is a hot button topic in a very close election. And anything that's going to swing things one way or the other. And if you're not really into crypto, you probably don't care about this stuff. But if you are into crypto and you have significant money on the line here, you don't want any administration that has this scumbag at the head of the SEC. You just don't want it. And it becomes a one-sided issue that's a win for one side and a big liability for the other. So he can dodge that question all he wants, but it's true. He has become a massive liability, as has Elizabeth Warren.
We are here to look out for investors, look out for issuers, and where appropriate, to be a cop on the beat. And we have a set of rules that are pretty clear. There's nothing inconsistent about crypto securities and the securities laws. Unfortunately, there's a number of people that are non-compliant with the laws.
Let me ask it a different way. Are you surprised by the political movement we've seen around crypto?
Again, I mean, I'm a securities regulator. I'm focused every day on that part of my job, which is protecting the investors, looking out for issuers, access to markets, fair, orderly, and efficient markets. And with all respect, I hope your listeners understand that's my role. Other people can speak about elections.
I'll answer for him. Yes, he is surprised, because he was chugging along. He was being a good little puppet for Elizabeth Warren, being anti-crypto, and this issue jumped up in a hurry, and that's why you saw him have to reverse course and approve that Ethereum ETF. They were not planning on doing that, and they had to. It was a must. And, he looked really bad. He looked super bad with all these Wells notices going out, going to consensus, which they're still looking at them for the MetaMask wallet issues, which has to do with swaps and the staking issues. But can he really do anything at this time? I don't think so. I think his hands are tied. And I don't think he was expecting that, because he's been given free reign to just terrorize everyone. And it looks like his evil reign has just about come to an end.
So the election is coming up, though, and although your term...
Anne-Marie,
although your term
take three.
Although your term goes beyond November 5th, is there something you want to get done? Do you feel like you're up against the clock to get something done before the presidential election?
Look, It's such a privilege to be in this role. I really mean it. I can't believe I'm serving.
He better get done whatever he wants to. Just our luck. These guys run longer than the presidential terms. And we saw with Clayton where he stepped down once President Trump wasn't going to be the president again. And it would just be our luck that this idiot, even if you did have a change in presidency, ended out his term and we got an extra year of this guy that we shouldn't have. Hopefully, if everything goes well after the elections, he will resign and they will get someone in there in the interim. And hopefully we can get someone with some common sense in here. And I understand the SEC, they can't do it all. It's not all his fault, to be honest. The Congress, they need to write the laws. And they need to get that out there so we have clarity. He can't do it all on his own. But, with his wildcat regulations, just arbitrarily suing everyone, just to try to get you to bend the knee, that's what's wrong. It's his approach. Again, he couldn't fix all the problems without those lawmakers doing their job. I get it. But, he saddled himself with Elizabeth Warren, and I think he took the wrong side of history. And luckily, we got a lot of great things across the line. We got that Ripple case, which was a massive victory, which shows courts are looking at these tokens, and the tokens themselves are not a security. That was very clear. We got the Bitcoin ETF across the finish line, and also the Ethereum ETF. So we've kind of paved the way here for sensible regulations. But that's really more the crypto space working against him, not with him, to usher in some of these good things. So we made a lot of progress fighting massive headwinds, but I've had enough of him. Hopefully he's on his way out. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Inc.